Bitcoin and other cryptocurrencies are notoriously volatile assets, regularly experiencing massive declines of at least 50%. The early believers in cryptocurrency appear unaffected by this scenario, maybe because they have become used to price drops of this magnitude. They take advantage of the decrease in prices to make additional purchases. When will the current fall in cryptocurrency prices finally come to an end? With all the recent drop in crypto prices, this is a question currently on every investor's mind. In just the month of May, global crypto markets lost more than $400 billion in value. Now let's begin our video and discuss when this bear market will possibly end in relation to the history of previous crypto bear markets. Bearish sentiment doesn't appear anywhere on the market. Instead, there are various factors contributing to the ongoing fall in prices. The present bear market may be associated with several factors, including interest rates rising, the highest levels of inflation seen in the past 30 years, geopolitical concerns like the war in Ukraine, and other factors. In this video, I will explain some of the reasons that analysts feel are responsible for the current bear market in cryptocurrencies. The federal government in the United States has decided that it is in the economy's best interest to raise interest rates sooner rather than later because they feel that the economy no longer needs to be coddled. The cryptocurrency market is known to move in tandem with the tech-heavy NASDAQ index, which has been experiencing a correction over the past few months. The cryptocurrency market has a particular connection with the US equities market and is known to move in tandem with this index. Inflation that is out of control. The United States and other nations like Brazil, Turkey, New Zealand, and others are battling inflation that has reached historic highs. Russia is working towards a total prohibition on everyday cryptocurrency trading, while other nations, including India, are considering enacting stringent cryptocurrency legislation. How long will the current bear market last? The answer to this question is nobody truly knows, but we can predict the longevity of a bear market based on history and current situations. After significant growth in 2021, the cryptocurrency markets have begun this year on a downward trend. In the previous year, we witnessed record high prices for cryptocurrencies, an explosion in the NFT market, with JPEGs selling for millions of dollars, and a blossoming in the DeFi market that expanded beyond Ethereum ETH and became multi-chain. Things are different now than they were before. We have experienced a significant decline from the all-time highs. While Bitcoin and Ethereum managed to lose roughly 60% of their value since their peaks, the value of many prominent alternative cryptocurrencies has dropped by more than 90%. The recent failure of UST and Luna served as a stark warning to investors of the inherent volatility of crypto assets, resulting in a steep price decline. Michael Hartnett, the chief investment strategist at Bank of America, stated that there might be months of more drops ahead. According to Hartnett, in the most recent 19 bear markets, the average maximum loss was 37%, and the bear market lasted an average of 289 days. If past trends are any indication, the current bear market won't end until October 2022. When the S&P will be at 3,000. After reaching an all-time high of 69,000 in November 2021, Bitcoin's price has dropped by 55%. The failure of Terra, the second largest DeFi ecosystem, occurred only a few weeks ago, resulting in an enormous loss of money in the annals of contemporary history, when the 7th and 10th largest tokens by market cap disappeared in a matter of days. Retail, institutional, even corporate investors lost a combined total of almost $60 billion in Luna and UST. These tokens had been ranked 7th and 10th, respectively. The link between cryptocurrency and stock markets hit an all-time high in 2022, the worst year for capital markets since World War II. This only served to complicate an already difficult situation further. The conflict in Ukraine, the greatest inflation rate in 40 years, and the policies now in place regarding money supply are just a few of the headwinds supporting a negative trend over the last 6 months. The anxiety brought on by staring down the barrel of yet another crypto winter is evident. However, since 2018, the sector has undergone a fast change. This is in contrast to the previous winter, which lasted for around 18 months and froze hundreds of projects formed during the ICO era in our minds. The situation compares the crypto winter of 2018 and the bear trend that has been going on for the past 6 months to determine whether another crypto winter is on the horizon and what the cryptocurrency sector should anticipate in the coming weeks. If you're a cryptocurrency investor, you may believe that the present bear market will never end. However, history suggests that bear markets end and values rise again. Over its decade of existence, Bitcoin has been pronounced dead a countless amount of times. To obtain some perspective, examine the many bear markets that have occurred since Bitcoin's birth, highlighting the fundamental causes that sent prices and broader societal mood into a spiral. Here we will discuss the bear market with an example of Bitcoin. Let's first look back at 2010. The Bitcoin price is still far higher than the price of a fraction of a penny at which it initially began trading in 2010. As a result, most of Bitcoin's early investors are now in a much better financial position. By June 2011, it had reached brand new all-time highs of about $30. By November of that year, however, the value of the cryptocurrency had dropped below $2.50, representing a decline of more than 92% from its all-time high. In that year, trade volume was still very modest, and many of the dozens of trading exchanges that are today widespread, such as Coinbase, did not yet exist. Mt. Gox, a cryptocurrency exchange with its headquarters in Tokyo, handled around 70% of all transactions involving cryptocurrencies worldwide. The website was hacked for the first time in 2011, the year that would signal the beginning of a string of subsequent attacks, and its final demise corresponded with the beginning of Bitcoin's subsequent bear market in 2013. Now on to the years 2013 until 2015. 2 years later, most Bitcoin trading was still conducted in the Mt. Gox exchange, which was about to go out of business. Due to several regulatory difficulties, Mt. Gox was essentially excluded from the financial system in the United States for the 2 years preceding up to 2015. It ceased all operations, including its website, and sought protection under the bankruptcy laws. According to data provided by CoinDesk, the first time the Bitcoin price rose beyond $1,000 was in December 2013. Another 2 years, it dropped back down to $200. In just 2 years, the value of the cryptocurrency dropped by an astounding 84%. The Bitcoin crash of 2018. This year's damage has been significantly more severe when measured in cash than last year. According to data compiled by CoinMarketCap.com, the total market value of cryptocurrencies worldwide has decreased by close to $700 billion since its all-time high. Since the beginning of December, the price of one Bitcoin has dropped by more than $15,000. In December 2017, Bitcoin reached an all-time high of almost $20,000, which is still its current price. This past summer, the CEO of Coinbase said that at the height of the boom, the exchange was adding 50,000 new accounts per day, the vast majority of which belonged to individual investors. The all-time high was also reached before futures contracts for Bitcoin were made available. These items have also decreased in price. They hit an all-time low on Monday, their lowest level since its inception. Trading volumes are also far lower than usual. At its all-time high, the 24-hour book of Bitcoin was close to 49 billion. However, as of Monday, it has dropped by 61% to 19 billion. Even Bitcoin bulls are expecting further short-term price destruction at this point. The price of Bitcoin fell by 85% from its all-time high. That would make the downward trend for Bitcoin this year the second worst bear market ever, which would indicate a price of about $3,000. Despite the volatility, it has nevertheless managed to post returns of more than 400% over the previous 2 years, significantly outpacing the S&P 500's 20% gains over the same period. The crash after November 2021. Since Bitcoin reached a record high of over 69,000 in November 2021 when crypto values achieved a record high, prices have dropped considerably. Now the value of Bitcoin is about $28,092.70, which will further go down in recent days. Cryptocurrencies and tech stocks have taken a significant hit due to the Federal Reserve's plan to increase rates in 2022 significantly. This is because both asset classes experienced growth as a result of the stimulus that the central bank provided over the preceding 2 years. In conclusion, I think it's safe to say that bear markets are not fun, but they are a normal and expected part of the investment process. On the unpredictable roller coaster ride that is investing in cryptocurrencies, the fact that there are a lot of unknowns about what will happen next is not helpful. Make sure to only invest money you can afford to lose and ensure that cryptocurrency is only a tiny part of your overall portfolio. This is ultimately the most guaranteed way to survive in the market, although nothing is certain for sure. Your financial situation can remain stable, even in the event of a total collapse of the market. Even while it is difficult to predict what causes price changes correctly, it is evident that specific events and narratives, both good and negative, as well as through news sources and social media channels, have a significant impact on Bitcoin's price. The history also reveals that Bitcoin has had bear markets in the past, and the present one isn't the cryptocurrency first and probably won't be its last. Thank you for watching.